Do you recommend putting whole life insurance slash IUL in a trust? If yes, revocable or irrevocable, and why? Great question. I just want to be clear that this is not advice, tax advice, or not estate planning advice. So make sure to talk to someone that knows your situation. I would say for most people, you don't want a trust to own the insurance because you can lose some benefits and flexibility, especially if you're going to play the irrevocable trust game. And so it's way more common to have the death benefit get paid to revocable slash irrevocable trust, and revocable trusts become irrevocable upon death. And so that's common, but it's not as common to have life insurance be owned by a trust for most people. Now, where this changes is if you really want to start, if estate tax is becoming an issue, then you have to do some deep planning and have irrevocable trust essentially set up where it can own and potentially have money passed down in that irrevocable trust system. Do not recommend it for most people because it can be complicated and expensive, but that's where, and you would do that to save estate taxes. For most people, I would not recommend having a trust own the life insurance, though you could have your revocable trust have money get paid in if you're very clear about how you want that money paid out. That would be a lot cleaner than having it paid directly to your kids. But life insurance is one of those things that can cleanly pay to your kids if you don't want the hassle when it comes to trust and all. Dom, any final words on that?
Yeah, I would say that people should do their due diligence specifically on a revocable versus irrevocable in a lot of ways. I know we've done in the past a lot of content on like the Rockefeller method, waterfall method, and I think the conceptual concept of how that strategy works is good in theory. But I do think that you can set something up regardless of who you are foundationally like that. But when you're using these tools, specifically the revocable or irrevocable trust, the waterfall method and the Rockefeller method is specifically with a irrevocable trust in a lot of ways. And a lot of that comes down to some of the tax things that you were referring to. But when you have one of those set up, you lose a lot of control in a lot of ways because it's no longer, it's no longer you, it's a separate entity. The revocable trust standpoint is something that can be revoked, which it's still, you are the one, the same entity as it, but that doesn't come with like other tax benefits or other strategies around it. It just has other benefits where, I think everyone could, to some degree, still get one of those that could help you in your financial journey. But that 5%, maybe even less than 1% of people should have like a truly complex strategy where a irrevocable trust is set up. And the majority of other people, if you have, let's just say $50,000 or more of like net worth, should probably look at a revocable trust strategically, but life insurance shouldn't necessarily be kind of like owned by that still, like you said.
Perfect.